All right. Thursday, November 2nd. It's about noon Eastern Standard Time. We're going to take a look at some news, some trades, and some trade reflections. So, news market updates here. The Dow is currently rallying as well as the S&P after the jobless claims report. Jobless claims were ticked up slightly, but relatively close to consensus or market estimates. And then Palantir up 21%, and we're currently waiting to see. I believe Apple is posting earnings after the bell. So we can see here U.S. Labor Department said unemployment claims rose to 217. They expected around 213,000. 210,000 the previous week. So we are starting to see the market have a little bit of a slip here, a little bit of an impact from those Fed interest rates being held so high. And obviously, the Fed yesterday, they held at the FOMC meeting, they held interest rates the same. If we do take a look over here at the Fed Watch tool, so this is a good indicator to see, what's the probability at the next Fed meeting that rates are going to go up or remain the same or go down? And the consensus right now, 85.5%, is saying that interest rates are going to be held again at the next meeting in December, on December 13th. So we'll keep an eye on this. This has actually been ticking up. Last month it was at 54%. Now it's at 85.5%. So really interesting stuff. I imagine with these jobless claims ticking up and the market unraveling a bit, we're going to see the interest rates most likely get held here. And we're going to jump over to the charts here. Before I do, I want to jump over to the Kitco Gold Index, which highlights two important factors worth noting here. One is the impact on the US dollar, the price of the US dollar versus other currencies, how that impacts the price of these precious metals and oil, and then also the actual trading that is happening. So if we look right now, gold, silver, and all the other metals, as well as oil, the US dollar has weakened. So we are seeing metals increasing. However, when we start to factor in the trading activity, we can see that gold is currently trading down 0.5% there. Silver's down about 1.25%. So most of these metals are actually trading lower today from normal trading activities. The dollar weakness is making the percentage loss not as significant as it most likely would be. And we're seeing oil really start to take off here. It has bottomed out, in my opinion, around $80 to $81 a barrel. So we're going to jump over, look at some trades. Current trades, we are looking at potentially silver. We have seen silver really in this consolidated range. If we take a look at the chart here, if we go to a 4-hour chart and kind of pull this thing in, we're seeing this like consolidated range here where silver has really had some key support right around 22.7 and key resistance around 23.7. So if we can get in a little closer to 22.7, we might consider making an entry here since it is in this consolidated range right now. Same thing with gold. So we are seeing consolidated range, 2020 being the ceiling here, a little under 1980 or 1975 to 1980 being the floor. So we're looking at maybe making an entry closer to 1980 here. We would go with a gold entry likely before silver, as I think gold is going to perform or outperform silver given the global and geopolitical issues going on. Dollar index trading down 0.64%. Platinum still kind of trading at this mid range where we had just closed out of a successful short. Palladium is getting close to an entry here. I like Palladium around 1110 or lower, so we are eyeing a potential entry there in that market. Copper, again, mid range as well. S&P, like we said, rallying 1.5% from some successful earnings beats, as well as Palantir being really up there. And as mentioned, oil is rallying this morning, so up almost 2% to 81.9 as of right now. So we are in on this trade, two positions at 80.65. So we are up pretty substantial here. I think around $2,500 total right now. If we look though at this position, we actually open up the chart here. I think this is a really good trade that has a lot of upside. So we bottomed out, and if we actually look at this on the 4-hour chart, and then I'm going to just pull this in. What I want to do is pay close attention to where this gapped up during the Israel and Hamas conflict. So if I just pull this down here, This was the gap up with the Israel-Hamas conflict, and if you look at the bottom here, the bottom was right around $81. And I believe there's a little bit of a change here, actually. So we actually moved into the next contract period here, which is causing a little bit of a discrepancy. So if you actually account for the change here from the contract from 1 month to the next, because keep in mind futures are continuous rolling contracts here, with they have an expiration date, but CL is continuously rolling, so it moves to the next expiration. The bottom here is actually around this Fibonacci retracement around 80.6, and we're in at that price point, right? We're in on two positions averaged at 80.6 as an entry. So I think we're in on the nearly the bottom of this trade. And, that's not to say that we, you know, let this run all the way up to wherever it's going to go. We may end up getting out, just taking some profit around, any of these points where there might be a reversal. But I think this trade has, maybe $1 of downside. We could go a little bit below 80 potentially, but the upside is going to be around 90. So we're looking at maybe a $1 $1.50 potential loss for a potential, $10 gain. And I actually have an indicator here, which I'm happy to share if anybody ever messages me, watches this video and wants it. It's a risk to reward indicator here. So we're going to do the one for oil. We're going to add this on the chart. And again, we are in at 80.65. We're looking at, in the long term of this trade, let's say a price target of about $90. And I'm going to put the stop at around $78 as, total loss that we'd be willing to accept. And if we look at this here, we're looking at a risk to reward here of 3.53 to 1. Given the potential loss versus potential upside. If we actually pulled in that stop price a little bit more, which I think mine is set around $79. Get this to update. Looking at a 5.6 to 1 risk to reward ratio. So this is a really stellar trade that we're in on. We may even just move the stop up a bit to make sure that we're locking in some profit here. What we may end up doing is switching to a trailing stop. So if this really starts to run up, we're going to lock in profits. What I will say for any traders out there listening, any new traders, I personally always do an OCO order. So OCO is one cancels the other. We have an entry price, and then we have a potential target price, and then a stop loss. So if this trade were to be wrong and we go down the wrong direction, we have a maximum that we're willing to take in terms of a total loss for this trade. If we're just wrong on the trade, this is the maximum we're willing to risk for the potential gain that we're looking at here. What I like to do, and I have these set up right now, two stop out prices and then two stop losses. I like to switch those stop losses if we see a really big rally, especially in just one given trading day. Like if this shoots up to 3-4% rally, I like to switch that to a trailing stop. We lock in some profits, and what it will do is trail the price. So if we set it as a 50-cent decline of a trailing stop, if that stock price ever goes down 50 cents, it will stop out. So it will trail whatever price it's at and always lag by 50 cents. So we're at 82 now. It would lag to 81.50 as a stop out price, which would lock us in some really good profits of nearly $2,000. So we'll wait for a further run up, and then we'll consider something like that. Right now, we are, I think, in one of the lowest points of this trade, and I see a lot of upside. So want to just call that out. Trade reflections, we exited a gold trade for a very small profit, $200 at 1990. I'd like to get in at a lower price here. We were in at 1988, and I believe we can try to get in here a little closer to 1980. Gold, I think, has a lot of room for upside if we can get to 2020 and break through that existing resistance level. But it's going to take some time, I think. It's going to take a little bit of a catalyst, which partly is going to be the US dollar decline. If this thing can get below 106 and really start to taper down, that's going to put more upside pressure on metals. And I also think we need more of a catalyst with what's going on in the Middle East to really drive this price up. So we're going to continue to watch that closely and see how things play out. But otherwise, we'll keep watching oil really closely here. We're in a really good profit, and we'll talk in the next episode. Thanks.